It's time to hand over to Ricardo for the main presentation. The cloud changed everything, but what now? So take it away, Ricardo.
Hi, everyone. Very, very good to be here. I hope you're all able to listen to me now. Just Alex confirmed that my mic settings are okay and clear for everyone.
Sound perfect.
Oh, wonderful. I'll provide my silkiest voiceover, so you just be prepared. So thank you, everyone, for joining. I see names that I know, some names that I haven't met yet, at least in person. I see the people that are attending from India, from the UK, from Brazil, of course, and other countries in between, the US, of course. So thank you very much for joining me today. This is a version of a presentation I gave on the last Money 2020 in Las Vegas. Of course, we are all sort of playing blackjack all night, so that was a different experience. But here we'll go through sort of the same content. The idea here is to go through this presentation, and unfortunately, I can't see your faces. So we'll wait for the end, as we said, to go over questions after I'm going through this. So the title of this is already a little puzzling, because people say, well, has the cloud already changed everything? Because we only 5 or 6 years ago, and I see some Amazon names here, guys, and AWS people in this panel here. And I never got a thank you note from you guys, because 5 or 6 years ago, when we started out Pismo, and of course, we relied a lot on you guys, we had to sell cloud as a concept for financial institutions, especially the incumbent ones. I remember very clearly going to large banks, and in some cases, people already sort of have a very clear notion what the cloud could do, but it seemed like a very distant future desire to move there and say, well, what, we just invested that amount, millions or billions of dollars in our own data centers. It doesn't seem like this is already mature enough for us to migrate to. We have solutions that handle very, very large volumes, that have very high security standards. I don't think it's time yet, but it's very cute. Congrats on what you're doing. Call us in 10 years. Now, lo and behold, 5 years later, we have about, according to this Accenture review, about 95% of a sample of, I think, almost 2,000 bankers. Banks executives saying that they project at least 50% of their business will be in the cloud within 3 years. And that's a major shift. And of course, for those of you who have been following the news around this story, you have seen probably that, as recent as this week, we had Ricardo Josua, the brilliant CIO from Itaú, saying that he is migrating a large portion of his business to the cloud, and that's sort of a necessity to gain scale, speed to deploy things, agility, and of course, cost savings. But we have heard that also from the likes of Standard Chartered, Morgan Stanley, JP Morgan, Bank of America. So pretty much every large bank, and the smaller ones will follow suit, are saying that this is a natural part of their strategy. So this is good, because I don't have to sort of sell the concept of cloud yet. I think most serious players are either already operating largely in the cloud and understand the benefits of migrating to the cloud, but there's a lot to be done after this first steps are taken. So I want to sort of take a quick break here, and I promise this will be pertinent in the next few slides. I'm talking about space shuttles and rockets here. I'm not talking about Elon Musk, don't worry. So the story is a story that I heard, I think, back in the late 90s, maybe early to the aughts, and it's a very topical story. So it seems that when NASA was preparing to launch the first space shuttle programs, they had to build this booster rockets that carried all the fuel to put the space shuttle into orbit, and those were huge rocket components. And they were built in Utah, and of course had to be taken to Florida, where the launch was being made. And the thing is, when designers started looking at how to build this booster rockets, they had to keep one constraint in mind, which was that these rockets had to go through the railroad systems of the U.S. to get to from Utah to Florida. So even though they had different options for design, their design had to be constrained by the width of the tunnels of the railroads, because they had to go through the tunnels. And those tunnels, of course, had to do with the width of the rails, and the Rails themselves apparently were to a large extent copied by the Rails within the UK, that in turn were based on a two-horse chariot with from Roman times, from the roads that the Romans built thousands of years ago, 2,000 years ago. But I guess what does that story has to do with banking? And I hope this will sound clear to everyone that has been working with migrations or technology replacement or building something within the cloud in an organization that has used to operate through mainframes or hosted solutions, which is a lot of what is being done today, even when you migrate and port solutions to the cloud, is a respec of existing solutions that ran on mainframes in most cases, and porting them to the cloud and say, well, now I have a cloud native solution or a cloud ready solution. But in truth, if you look a little deep, or not even deep, but if you look at the solutions themselves, they still are built for the structure that was defined by a very, very old technology infrastructure. So if you look at financial services, most of what we have today is built on top of technology from the 1970s and 80s. So everything you have in banking today is a sort of result of slow networks, offline processes, because you had very expensive computational capability. We had very limited storage, very limited computation capability to do a lot of online processing. And of course, we had to change stuff with sort of an assembly line process, what we now call the waterfall structure, that took very, very long time to adjust and to adapt. So these were systems that were made for that era that still operate underneath pretty much everything we do in banking today. Now, we all know, and I won't go through all the bubbles here, but we all know that the current modern solutions include, first, ubiquitous access to data in a very fast fashion. So we have the ability to stream information to clients through a 5G network. We can have real-time information. By the way, most of us who work with, and I'm assuming most of you in the audience are working with banking services in some way or technological services. And you see that if an app, or even in your personal life, right? If your app takes like 4 or 5 seconds to refresh, or 2 seconds to refresh, or even 1 second in some cases, people will fume, right? They will get disgruntled, and they'll throw their cell phones and sort of on the floor and step on it and say, what's happening? It's taking 2 seconds since I type something on my Google search, or my system won't load. My daughter, who is my youngest daughter, who's 10 years old now, if she clicks on something and it doesn't sort of instantaneously give her feedback with the information she wants, she will tap furiously, on the phone screen and just say, "Oh my God, it's taking forever." I said, "Look, it's not been a second yet." And of course, in addition to this, we all take for granted that we have essentially unlimited data storage, right? We can store pictures of us, making different poses in front of the bathroom mirror, maybe for uploading this in the future. And most people don't even care about deleting those anymore. And of course, if you're talking about enterprise, there is very, very cheap alternatives to store high volumes of data. In addition to this, of course, when we started doing parallel processing, we have a lot of network computational capabilities that can process volumes that were unheard of and impossible to process in 20 or 30 years ago, or even 10 years ago. And lastly, and I'll talk a little bit about this later, we now expect change with a lot more frequency than we used to. So if you look at the way the challengers in financial service and fintech market have operated and wowed consumers 5-6 years ago, was that they were changing their apps and their experiences and their products every other week, if not every week, if not even every day. And that was a major change from what incumbents were usually providing, which were updates every several months, every semester or something like that. Now, with all that being said, with all that change, when you look at many applications that are still running today that have been added to with solutions for cloud components and that have been ported to agile squads, but still rely underneath in infrastructure, and even those that don't rely anymore on those constraints from older technology, it still looks like sort of a two-horse with solution, right? A lot of what we do today does not necessarily have these limitations, but operates as if those limitations are there. And I'm not talking rocket science here, literally. I'm talking about things that are currently available through some of the tools that the cloud has enabled that are still not being used. And I'm going to talk a little bit about some of the things that I see at Pismo, and I think most of you also see, that are sometimes even frustrating, that we are doing so little with so much opportunity that we have to change things with current technology. So the first thing is data, right? I think I have here two screenshots of bank apps that I have on my phone, and these are, of course, real data from my phone. I just obscured the card number there, hopefully, but this is actual information. And if you look at the left side hand, it's my Morgan Stanley, if you want to know, account. And if you click on a transaction in Morgan Stanley, what you look at today is just very abbreviated or acronym-based information. So the description of the transaction is WMT Super CTR number 1115 on Maple On. I have a transaction date. I have a number that is broken into two lines on my iPhone. Then I know it's my debit card, the amount. I have transaction date, activity date, and then settlement date, which are different dates potentially. In some cases, there are 3 different dates, and then a check or card number, and that's it. That's the whole amount of information I get for this transaction. On the right-hand side, it's my PTG account, and of course, you see here that a lot has been improved on the sort of the more traditional infrastructure. So I have the exact time. I have geolocation, so I know where this purchase was made, or where I was when the purchase was made, at least, because it takes from my cell phone. I have, of course, more details on exchange rate and how I sort of transacted this, if I used contactless, or if it was a mobile transaction, or if it was a card present transaction. I can edit and categorize information, and of course, I can tag and add information, so it will help me understand my finances in the future. And of course, this is already a major improvement. I think everyone can agree on sort of the basic application we used to have and still have in our bank accounts today. But even that is still largely, barely scratching the surface of what we can do. There are limitations today based on the rails that we have, or based on the tradition and the culture that we have around what kinds of information are stored. But we now have metadata structures, and we have processes for enriching information after they are authorized that could potentially give me a lot of additional information. It could give me instant promotions, based on my purchase history. Remember that, and I think this is interesting to note, there's people that estimate that the sort of attention industry or attention market is in the order of several $1 trillion. Some people say $8 trillion. So if you look at what Google and Facebook and Snapchat and TikTok do, they're essentially trying to understand your behavior through the things that you post and like, to presume what you're going to buy, and then put an ad to you. And they do a very good job, of course. They have very sophisticated information. Now, realize that we do have systems today in place where we know exactly what I bought. So if a client opted in, and I for one, would definitely opt in and say, listen, this is my consuming behavior. If you want to sell something to me, look at what I'm buying, not, don't try to presume from what I'm seeing. And I can see, in the near future, a situation where I'm, doing a purchase, and then, a chime comes in, instantly say, listen, I just saw that you bought this. You can refinance this, or you can buy something else and add, and you get a discount for the second item. I can see my transaction being reached by the details of the transaction. So I think, there's a lot to be done here. I think we're barely scratching the surface today. Just to give you a sense of how much bandwidth we are feeding here when we're not using this. If you take a streaming episode and used on a 5G network, today, you can do it in 16 milliseconds on a cell phone resolution. If you do it using the ISO networks connectivity requirements, in Brazil, the old RAN-PAC, and in the US, the old data network, that was the dial-in network. This would take 360,000 seconds. So of course, we did have to constrain the amount of data that had to sort of traffic through the bank or issuer or financial institution and the consumer, because we didn't have the bandwidth. So we needed to abbreviate the name of the merchant. We had to sort of be very concerned about how and what information was key and necessary and mandatory for a transaction. Now with the bandwidth available, there's at least 100,000 things more that you could be doing here. I'm sorry. So the second point that I want to highlight here, that I think is also ready for the taking here, and something that we are already experimenting with some of our clients, is doing more in real time. I think people already understand the benefit of streaming services and having on demand and real time data for using this. And I know a lot of our clients are using this, instant feedback on messages to make decisions, to inform their clients, and to use this for intelligence and analysis in real time. But it's just a small portion of clients that are actually, and not our clients, I mean, in the industry, a small portion of users and banks and financial institutions that are using event streaming as part of their strategy. About 13%, according to our research here from Response Source. And from the customer perspective, of course, we can use this to inform the client, as again a lot of our clients do. So the client knows on their timeline instantly whatever's happening with a dispute, a new card being issued, something goes through the mail, a transaction is declined. Everything is now informed. And I, as a user of most of our clients' products, at least those in Brazil, I appreciate every single piece of information I get in real time. Of course, we could reward, and sometimes we do reward in real time as well. So not only inform the client, but say, by the way, you did this, and because of that, we're giving you a reward or a prize, and if you sort of keep it up, we'll give you more and incentivize, the behaviors that are useful for the client and, of course, for the financial institution as well. And influence behavior, I think, is just in the early days. But we could influence behaviors to help people save money, like the ET goals is doing, and other sort of clients of ours are also implementing similar solutions. And we can do that, improving on real-time information every single interaction the client has with the bank. But I think the other interesting aspect of this is that although event streaming is used regularly already for informing the client, we could also use this real-time information. And again, some of the clients are already using this to operate their back office operations, right? So we can have this for reconciliation processes, to sort of process asynchronously transactions instead of waiting for the end of the day or waiting for a batch process, and even summarizing information to provide important intel on the behavior of the business. Those who work with us know that we can even sort of post transactions and accounting events in real time, so you can sort of update your income statement from your business in real time if you want to. Just to give you a sense, and this number is slightly outdated, but we already stream more than 80, and I think now it's closer to 100 million events daily to our clients. And I think again, I think most of them are doing a brilliant job, but we do believe that we can increase this from our perspective, and get more information, more granular information provided in real time, and more transformations. And of course, I believe that there's more that can be done, both from the consumer side and from the bank side, to improve the experiences. Now, the last one I'll go through here before I sort of conclude this presentation with a couple of other notes is about change. I think this is the one that I love the most. I've been working in this industry for almost 25 years now, and this is, or has been, the most immense change that I have seen after I started Pismo. For me, change management, G-moods, whatever you call them, change management was a nightmare. I remember, and I have vivid memories, and for those of you who have worked with me on my previous job, I remember going to the office, late at night, preparing for, our release where we had merged several, dozens or even hundreds of pull requests, and we're just, preparing to replace a version with a new version. And just like the Indiana Jones movie, like, for those of you who are old enough to have seen this, non-ironically, just trying to find the right way and just saying, well, it might work. We all hope it works. And I remember, I'm not a religious person, but I remember praying, saying, "Oh, please God, let me just go home, early in the morning and let my phone not ring from a client saying that something went wrong." But inevitably, sort of the boulder, from Indiana Jones would come hunting us, and there's always a problem that happens that was not foreseen before we deployed, because of course we're changing things very deeply every time we change something. Now, this is a quote from that we chose to sort of redact the name of the institution, but this is a recent quote from 2021 from a head of a retail banking in the US, saying, no, we do have only 2 releases a year, but we do that by design and not because we can't do more. It's because our processes have been optimized for compliance and not speed. So we're doing this and we're fine with it. Now, I guess all of us, in one way or another, is interacting with Google pretty much every day. At Pismo, we use our emails and the Google Street information. And this is something that I think, I don't know the last time I had any hiccup on that. And they're doing about 1,000 releases a year. And, to the chagrin of some of our clients, we are doing 4,200 deploys a year. And I know it sounds a lot, and I know that this sounds riskier than 2, but we actually have a very strong belief that this is a de-risking strategy. Because if you take your changes and make them very granular, you make each deployment less risky than the other. But more importantly, and I think this was sort of the key change for me, we have now a process that allows us to do this without replacing versions. So all of you that work with Pismo know that we have canary deployments, progressive delivery. We're always improving on that and trying to work better ways to do this. We just recently had a revamp on the process. But the idea here is that we can set up a new version besides an existing one, migrate a few of the clients or a few of the transactions to that new version, and control in a very observed environment what the impacts were, and then roll out to the rest of the clients gradually, or eventually roll back. And we do roll back. And the idea is that even though, of course, no company is perfect, whenever we have a problem, it's minor, and it's a small proportion of all this deploys, a very, very, very low proportion of this that requires either a rollback or any kind of intervention. And this is because the system has been built for this. But this not the silver lining, but the benefit of this change in CI/CD processes is that we get to experiment more, and we get to adapt in a more agile fashion. We're not waiting, we're not consolidating stuff, we're not merging versions. We are experimenting, giving the freedom for teams to work out best solutions. And since they're granular, we can do adjustments and iterate much faster. So if we do something, it doesn't work very well, we can always sort of reshuffle and sort of deviate from the original plan very smoothly, instead of waiting 6 months and, oh my God, I forgot about this, it won't work. And the deployment phase, you have to roll back and replan the next 6 months. So I think this is crucial. And I think it's something that not only us, but most of our clients are now doing. And I think it's a major change for the industry that has been very conservative to be able to follow demands from our clients and from your clients with more speed, with more accuracy, and with lower problems in operations in general. So the last, I said that was the last of the 3 trends, but I know that no presentation about the future is ever complete with crypto. And I'm sorry that I did this presentation before the SBF debacle in the US and the FTX bankruptcy and whatever else we'll see now. Probably around $5 billion missing, and I think people are now questioning crypto more than ever. But still, I think it's important to sort of talk a little bit about crypto and DeFi and other sort of tendencies in new structural finances. First, I want to sort of give a clear understand that this is the future, but it's still, unlike the other trends that I talked about, this is still the future, right? Although the market value and volume of cryptocurrencies today is relevant in the order of $1 trillion, it's in terms of transaction volume and operations and daily transactions for transfers and purchases, it's still a sliver of what even the card networks do. And of course, if I include here all bank transfers, this will pale in comparison, right? So Bitcoins, of course, is a proxy as sort of the most famous and most traded, crypto today, does almost 500 million transactions per quarter versus 5 million, billion, trillion transactions from Visa and MasterCard together. So just to give you a sense that this is the future, we are looking at it, and we also believe that this technology will provide very important changes to the industry, but it's still more in the future, and I'm more concerned about the things that we can be doing now. The second thing is that there are still a lot of questions around how to implement technology for first scalability, and of course there are hyperledger solutions out there. There are a branch in Ether that can provide better transaction flows with fixed gas costs. There are a lot of important initiatives happening, but again, they're still nowhere near specified what the solution will be and for what. The second is that, and I think this is the key one for me, and this was very clear for those of you who want. Well, there's a BIS report talking about 97 of the sort of central banks CBDCs, the central bank digital currencies that have been issued, and some of the problems and challenges that they're facing, and some of the benefits that they're bringing. And one of the key things from that I really sort of enjoyed reading and thinking about is that you cannot have a replacement of an existing financial system with another one, with total disruption. So if we, for example, even if we have a perfect technical solution, if we change the currency of a government that is managed by monetary policy to a CBDC issued token, you leverage every financial institution in the market instantaneously. And that is, of course, that breaks the whole system, right? That breaks every bank in a single country. So there will have to be very smart interoperability solutions where transactions from crypto or CBDCs will be connected to current rails in a better way. And I think that's where the sweet spot that Pismo, for example, is operating in, is where that interoperability will happen. And of course, no less important is that regulation has been falling behind. I think after what happened with FTX this last month, I think it's going to sort of advance much faster than before. But still, I think this is sort of a ways in the future. So we'll be watching this. But more importantly, I think that every core system and every solution should be ready for these changes. Whatever comes, we should build, and we are striving to do that. Every time we look at a solution to a problem, we try to abstract from the specifics of this problem and see how that would impact the nature of the request, of the requested function of that. So if the function is moving money or storing centralized information about a balance, or processing a transaction and providing financial and regulatory and fiscal information, our systems should be prepared, and we're striving to do so, to deal with whatever source of information is connected to these. It can be a blockchain protocol, it can be a smart contract, it can be a request from a centralized payment system like Pix in Brazil. But we always look at everything that we're doing from a primitive standpoint, so from an abstraction standpoint, and from an orchestration standpoint at the same time. So this is how we're looking at the future. And again, the three items, just to finalize my speech today, the three items that I'm talking about, I think are so important because they're available today. It doesn't require any new technology to be developed. It doesn't require any new challenge to customer behavior. These are things that can be done today. Of course, the intellect and the expertise of our clients and other financial institutions in how to deploy them and how to sell them and how to monetize them will be crucial to all of this. But I believe there's too much to be done and too much difference from old rails and no new rails in the cloud not to take advantage of. And I think it's very hard not to think with the two horses as constraint in your mind. Every time we build something with clients that are migrating from existing legacy protocols and clients that are building new stuff from scratch, the first mental model we have is based on the constraints that we are used to. So, I'll finish up with just one example here that I love, which is the credit card, right? Clients are used to have a credit card with a cycle that, closes on a given day and then has a due date 7 or 8 days after that. And the main reason for that process and that mechanism was that because we had to envelope and mail those invoices to a client in their homes. Now, if everyone now has instant access to their information in real time on their phones, is this the best way we can provide financing information and management of the client's behavior? What could be done differently for clients that are ready to change? So those kinds of rethinking and reimagining is what we're challenging ourselves with, and hopefully with the help of our clients will help redesign products for the future. Thank you very, very much to everyone. Of course, I'm assuming you all know where to reach me, but here's my email and my LinkedIn. It's been a pleasure sharing this with you. And I guess we'll open for questions, Alex.
Incredible. And yeah, as someone who started their career as a journalist reporting on the cloud in 2011, I cannot agree more that it's about time we started talking about it in a different way. So we do have some questions coming in. For anyone who wants to ask one, please use the Q&A box down the bottom of your screen. I'll be reading out the questions and Ricardo will be answering them as we go along. So first one is about regulation. How do firms deal with or what's the strategy when you might be confronting regulators in countries who might not have a clear yes when it comes to data on the public cloud?
Yeah, that's a great question. And I guess, Raj, thanks for that. I think, there's going to be nuances to the discussion, but I'll give you sort of a broad overview. What we're doing with regulation constraints is making sure that we're always keeping in mind the function and an abstract function that our system provides. So, for example, we, for those who are familiar with our APIs, we work with account information and client information with the possibility of the bank or the financial institution adding an external ID or something that relates to their codes for identifying a client or a universal ID to identify this client here. Our APIs do not require anything else other than that. So we have discussed with a number of clients the option, and some of them have implemented something like that, where they store on their side all the sort of sensitive information about client identity, and they just create the key that they use there to identify a client, and they use that key to sort of create an application and register this client and account here at Pismo. There are a number of ways of doing that. And again, the difference with APIs and cloud-enabled systems that work on native micro, because everyone can be on the cloud, as I said, right? Everyone can put a mainframe on the cloud today and sort of access that. The difference is that if you have, as we do, multiple microservices that are largely that can work largely independent from each other, as long as you respect the payload structure and you put information, minimally required information, in this case just the ID that identifies this client within your structure, you can have your own data hosted for this information. So this is one of the approaches that we've been using to confront regulators and even clients' concerns in terms of data storage.
Fantastic. We have one here about payments data from Rich. He says he once worked for a company which unfortunately is no longer around, but provided the ability to add receipt and order data to people's online banking under their transactions. He wants to know whether you see that as a functionality as a value add to banks and how that fits in with Pismo.
I think this is one of my sort of greatest frustrations in this industry. Even when we started building the platform way back when, in 2015, 16, we were talking a lot about metadata and enrichment data, sort of in an unstructured way, in an ad hoc form. Not only the receipts, but everything in between. Who was the sales clerk that helped you out? Where were you? What were you wearing? What was your mood back then? Which items you bought? which items were on promotion? Did you look for items that you didn't get? What all this could be stored, right? We have structures today that don't have to be relational database structured or predefined fields. So we already have some of those capabilities, and I think they're still being used in a very sort of timid way, although in very interesting ways. So yes, of course, I do see that. Of course, there's challenges here. We have to make sure that this information, consumers don't like to add a lot of information. Some people will use tags or will add sort of a detail. We can upload this information if they choose to do so. But in an ideal world, we can definitely capture more information. I think with closed loop solutions, where we represent the sort of the purchaser and the seller through the platform, and with sort of newer instant payment rails, I think those information will be available, and we won't have to change the platform to deal with that. So yes, I definitely think this is crucial. And as I said, the attention seeking economy, selling ads to people is a $1 trillion industry, multi-trillion dollar industry. So if we can use actual behavior to understand what people are buying and do something that is actionable and can be converted instantaneously, because imagine you open your TikTok or whatever you guys use today, and there's a sort of promotion saying, oh, based on the post you like, you might want to buy a Hello Kitty doll. And I said, oh, how did you find out? But I actually have this one. By the way, I'm looking at this because I bought mine last week. And then, you sort of lose the ad. I interact with the ad, but I have already bought this. And then, of course, if they knew this, they could have sold me the Hello Kitty, sort of a rainbow bow that goes on her head for me. Now, if I have information for that on my phone, not only I could be sort of prompted for a very pertinent ad for the add-on for the Hello Kitty that I bought, but I could have promotions and feedbacks for that, and I could have information of payment instantaneously as well, because if they know my payment methods. So again, it seems that we are very, very far behind. There was a time where I believed that we would have in Brazil and other sort of developing countries solutions very much like Alipay and WeChat Pay. It hasn't come to fruition, but I still believe that the underlying truth of having a closed system where the interaction between consumers and sellers is more rich is still up for grabs. Thanks for that, Rich.
Great. I think we have time for just one more. Asar asks, how do we bring security to innovation in the traditional banking market? Where do we start to avoid doing the same things we do with mainframes, but in the cloud? We know the value of innovation, but we also know the cost of not innovating and ending up like Kodak and Blockbuster and a few others.
Yeah, I guess. Yeah, that's a great point. I saw it. I know. I don't have to tell you, right? Everything we do, and this is, I think, a false presumption. Things presume that because cloud is new, it's less secure than the old infrastructure. I think we have made important headways in terms of security. I think Pismo is very well positioned through that. But of course, I think it's more to do with inertia. I think people, in our experience, only make a decision to do a change that spans multiple quarters. So remember, we are now in the process of migrating several of our clients that have signed with us. It takes a long time. It's not an easy task. There's a lot of interconnections and dependencies. It's costly. It's hard. But as you said, the cost of not doing it is also very, very high. But it's more abstract. So I think it's very Shakespearean in the way that people will rather suffer the ills that they know than sort of venture into the unknown and see what would happen if they change to something. There's a lot of inertia still, but I think it's breaking, right? Some people say that bankers like to be followers because they don't want to sort of be the first one and break their noses being sort of in the forefront. And I think what we are seeing now in the last 2 to 3 years is that every single bank is coming to the realization that if they don't do this, they're going to be stuck in time and they're going to be in really, really hard trouble, because you don't want to be the first, but also if you're too late, as you said, you can become a dying business.
Fantastic. Well, I think that's all we have time for. We've seen all your questions. Don't worry, we will answer them in due time if possible over email and get in touch with you with any answers. It would be remiss of me not to ask you to follow Pismo on Twitter, LinkedIn, or Instagram if you're not already. Just search for Pismo and look for our lovely logo with the orange waves. Finally, many thanks to Ricardo for his presentation and to everyone who came along for attending. We hope you have a fantastic rest of your day wherever you are. A recording of this webinar will be sent to you by email afterwards. So you'll see us again then. But until then, goodbye.
Thank you very much, everyone.